All right, guys, what's going on? Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking time out of your day to join me today and every afternoon, 5 p.m. Eastern Standard Time, here on the G.A.R Capital YouTube channel. If you like these videos, make sure to hit that like button. Make sure to subscribe, bottom right-hand corner. Let's get started. Dow came up 1.34%, was actually held back today because Walmart had its worst day since 1987. We posted the earnings this morning. NASDAQ up 2.76% on the composite. S&P took 2%, 4088. VIX was down nearly 5% today, 2610. We'll take a look at a couple of levels too. On the VIX, RSP, equal weight S&P, up 2.12%. Small caps rallied today, up 3%. Best of the board. Dollar came back down. Good backdrop for multinationals, down 0.85%. Yields came up, but still right below that 3% level. TLT came back down as bonds were sold. High yield credit kind of stabilized with the NASDAQ up, and investment grade bonds were down 0.57%. Crude oil down 0.47%, but bounced on an API surprising crude draw that was reported right at 4:15. I'll post that crude draw here in a second. Here we go. Just got it. That's the API crude draw down 2.445 million in crude, gasoline down 5.5 million. So those are gasoline inventories, API. That was posted right now. Let's see here what's next. Gasoline futures down 1.78% even after the draw. Gold flat. Silver up 0.41%. So commodities had a mixed day. Bitcoin, again, we know that's the risk on kind of a marker. 30,050. Ethereum 2,000. So right above 2,000, right above 30,000 on Bitcoin currently. Seems to be that level right now. And commodities did have a nice day according to the commodity index, up 0.60%. Let's take a look at S&P futures today. I did catch AMD. It was some unusual options activity. We did catch it. AMD was the 100 calls. I don't know where it is on the runner, but it soared. Excellent day today on AMD, up 8.73%. I was pissed off yesterday because I thought I wanted to close for 32%, but it moved higher. Congratulations on all who caught it. AMD, a great trade with great volume. Nice breakout on our level. Take a look at S&P futures. Again, we talked about this inverse head and shoulders on the 1 hour. So far, it is doing the trick. We should get to 4101 for that break. I expect that overnight. I am bullish right now, short term. 4160, 4150 is your next target. If you are playing futures, that's the target I am looking for with a break of 4101. Again, after 4101, that's your next support. That's the Russian invasion lows. We could get to 4160. My bet is that towards the end of May, we'll probably end up right around 4,200 or 4183, which will probably break even for May. That could definitely happen again with this inverse head and shoulders. Get us to 4101 overnight. Let's go to 4150, see where we go from there. Probably digest that move during the day, probably gap up tomorrow, and then we'll see how we end the week as we have OPEX this week. Probably a little bit of weakness into that number, probably get to 4200 or 4150 and stabilize there by the end of the week. That's what I'm looking for. Just really much this inverse head and shoulders just to get us back to around 4150. If not, we can always get about 4252, but that's a tall order. We do have more earnings to come. Walmart did not help things. Home Depot had a great quarter, and then up 1.68% was a lot higher. That's S&P for you. Taking a look at VIX. VIX smash. We do have a gap to fill on the upside, 2734. Thought we would get it in the morning. Got close at 10 a.m., but we did not. We faded down, bounced slightly, and now we have filled this downward gap to. Oh, we have not yet filled this downward gap to around 30. Was it 20? 542. Let's go ahead and create a couple lines. Make sure that we have that level. We can always put an alert, but I like to do the lines as well, and you can see it there. We had an ascending triangle here, actual setup here, a pattern to the upside. Nice diagonal line that shows support right here and right here. We broke down that ascending, setup. But then again, we still have gaps. So again, we have one more gap to fill. It did not fill as of yet at 25.37. I expect it to get down to around 23.43. After that, it really remains to be seen what happens next on VIX. In terms of 10-year yields, kind of just staying around, filling gaps as we go. We have one more downward gap here at 28.93, and that should fill, if not tomorrow. That's what I expect. So I expect yields to come back down a little bit. Let's answer some questions. Hello, good afternoon. Do you think TGT will have a sell-off like Walmart? Interesting. I had that discussion today regarding Walmart's earnings. Again, same-store sales were down. Home Depot's were out of the were magnificent. Their earnings. So maybe Walmart. Again, keep an eye on the staples, the consumer staples, the Costco's, the Walmart. And I love Costco. Walmart. Let's go ahead and go over the map on consumer staples, so you know what I'm talking about. So here's the consumer staples. We can go, this is cyclicals, defensives. People say staples, I say defensives. You say defensives, I say staples. Walmart, Costco, Target, Dollar General, Dollar Tree, Coca-Cola, Procter, PepsiCo. We know the names, Philip Morris. We know that these are the names that are more defensive when it comes to a market fall. But now seeing Walmart's, a consumer defensive name, falling 11% on weak guidance. Again, this is supposed to be kind of your protection in a sense. The way to protect your portfolio is own consumer defensives. But the issue is, let's take a look at the year-to-date performance. Outperforming pretty much everybody. Costco, hit an all-time high and came back down to 12%. Coca-Cola is up 11% for the year. Look at these names. Philip Morris, 11%. Altria, 11%. Procter & Gamble is a little expensive. Estee Lauder down 36. Again, Costco 12%. Target down 5%, while the market's down around 17%. Dollar Tree up 14. Dollar General kind of flat. So again, these names have kind of outperformed or generated alpha against the S&P. So even with this drawdown on Walmart is still green, 2.43% for the year. So again, look at the names that are defensive. Energy, inflation play. Healthcare, another defensive sector. Telecom provides yields. Again, you're going to make money on the yields. That's really where everyone's chasing, especially when dollars become more scarce as rates increase. That's kind of where you want to go, is the defensives, just to kind of hold down the fort. The problem with defensives is that, unfortunately, they are overbought. So we go to, let me see, the ETF for consumer defensive. What's the sector ETF? I gotta find it here. I forget the actual ticker. Let's see the spider ETFs. Discretionary staples are XLP. There you go. XLP. Let's take a look at XLP. We'll go to the daily chart, 2 years, and you can see just climb last couple of years. Let's go to the weekly. Just an absolute climb. Obviously, you had COVID, but again, the staples have been working long term. We know that. 20-year, again, has been working. We could tell. Let's compare that to SPY, and you could see the alpha generated on owning staples. Only problem with owning these staples now, are they gone too high, too fast? Well, that depends. Let's type it up, XLP stock on my Google, and let's see XLP PE ratio. See if I can get the XLP PE ratio. For XLP, the fund price to expense, I'm trying to get it set up here from State Street. Accept my stupid cookies, whatever. Let's see. What is your PE ratio? Price to earnings ratio is right now about a 22-26, while the S&P now, in comparison, is near about 19, or 22 or 23, I believe. 22. So pretty even. But again, have they gone up too high, too fast? You can always use different patterns in terms of how can you tell that. You can always use RSIs. We'll go ahead and see the RSI here. I don't like using that as much, but it's a good thing to check with. So relative RSI. Let's take a look at the RSI on the 2-year daily. So not oversold yet, overbought. Right in the middle. Again, right in the middle there. Not oversold, not overbought. But I think that the cyclical end, I think Walmart's kind of giving us a hint here that, maybe recession fears, you kind of shop at Walmart when things are not going your way or you need to save some cash. But yet Home Depot, Nike have told us that the consumer is pretty strong. And, not everyone's just running for rice and beans just yet. So that's what my conclusion is. Again, I'm not against these staples because you're going to get a yield anyways. I still own Costco, but I don't think Target is going to have that kind of number from Walmart. I think actual Target will bounce. I think Target will have a great quarter. The way my wife shops there, I think they're going to have a great quarter, personally. Levels to add Google and UNH. Google, I'm still waiting. Again, I'm waiting for the pullback on where we're going to get at least to this gap fill right here at 21.45. I'm waiting for an ES target of around 37.50. That'll get us at a 3% yield, about 17 times forward earnings. And I'm okay with that price. In terms of UNH, I remember back in the day on YouTube, I used to say anything below 400 is a gift. There is a gap to fill here on UNH. We may get there. Who knows? It's right there at 405. So that'll be a good level for me to add some more, or when we get to S&P 3750, whichever comes first. What do you think about auto parts businesses like LKQ? Yeah, I like AutoZone and GPC. I would say GPC is probably the better one because they're a lot more diversified. So if you type up GPC stock, it's one of the, I believe, the stock, the dividend aristocrats. Pays a 2.8 yield at a 21 ratio. Again, not terrible, but revenue is up, income's up. You're getting a premium for this name. General Parts Company, that's Napa Auto Parts. Year to date, they're really flat in a really bad tape out there. So again, you're getting some protection on GPC. I think GPC is a great company to own. If you take a look at AutoZone this year to date, it's up about 12%. That's AstraZeneca. Let's see, AutoZone. Sorry, that was the AstraZeneca AutoZone stock. AZO. AZO year to date is flat, just like GPC. I just checked it. So I think those two are pretty much their best bets in terms of fundamentals and especially PE ratios. AutoZone is actually cheaper. The problem with AutoZone, guys, it's a $2,000 freaking per share stock. So think of it as another Google. If I can get this going, give me a second. This thing jumped. Wow, what a pain. Here we go. $2,000 a share on AutoZone, or you could just get to GPC stock, and it's $137. For a little protection, not bad at all. I think, especially for those kind of names, as people are probably going to hold on to their cars a little longer, as we are getting, the semiconductor shortage. Something to think about. Again, not everyone probably agrees with me, but that's what I'm thinking on those names. I like those both very much. I don't own them as of yet, but again, I think they're great to own. Hey, Carlos, any thoughts on calls for Apple tomorrow? I am bullish, but give me that 150.11 break. I put an alert at 150.41, and we get that ascending triangle to the upside. Break above, might get to 153.41. So I am bullish. I think we recapture, if anything, 155 on Apple. Let's see if we get that overnight gap tonight. I think we're going to move higher overnight. Asia buying, Europe. I think we get to 41.01 overnight, and then 41.40 is your target on S&P. Now everything could change, but again, Powell did speak today. We got retail numbers. Taking a look here on what's the possible landmines, right? What could we possibly get in terms of news tomorrow? Wednesday we have G7 meetings, building permits. That's housing. Housing starts important, and crude oil inventories. Whew, not too bad. We should get a nice green day tomorrow. Existing home sales on Thursday. G7 meetings, Philly Fed, and Friday G7 meetings. So G7 meetings all week. That's what I expect. Have a great rest of your day, guys. Enjoy your afternoon. I'll catch you guys tomorrow for the morning note. Cheers.